So for more on that and really for the jobs reaction that we got out this morning, I want to bring in Diane Swonk. We have chief economist at Grant Thornton. And Diane, let's just start with that number, 4.8 million jobs added in the month of June, unemployment rate down to 11.1%. What are your thoughts on the results that we got this morning? And do you think that the jobs, are they coming back much faster than you initially anticipated?
Well, at first, it's certainly a good number at first glance. We're regaining about a third of the jobs we lost, but we're still in the hole by more than 14 million, which is almost double the losses that we experienced during the Great Recession. So, we have a deep hole to climb out of here. And we know that this survey ended the week of June 12th, which was before we actually got to the surge in COVID cases across much of the South and West and the pullback in activity that followed that. We've also seen some states sort of reverse some of their reopenings of restaurant, bars, and gyms and beaches for the 4th of July holiday. All of that will contribute to some layoffs as we move into July. And actually, we're looking for July to be more flat to down. So this is really going to be a rocky, uneven recovery because of our inability to manage the surge in viruses and the course of the virus.
Yeah, and Diane, going off of that, it's interesting here when you compare the number that we got in non-farm payroll number to the weekly jobless claims number, and just in terms of how much we should trust each number. How are you viewing that? Because some economists today coming out and saying that, hey, maybe we shouldn't give more weight to this number that we got this morning. Rather, the jobless claims number gives a better picture of what's going on.
Well, unfortunately, the jobless claim numbers are really bad as well because states have really scrambled either with antiquated systems or different kinds of problems they've had with just the sheer surge in applications they face. They've been carrying some initial claims from week to week, so that inflates the initial claim numbers. They also have been classifying what they're supposed to classify as special pandemic assistance. These are the extension of unemployment claims to gig workers, furloughed workers, self-employed. They've put some of those in initial claims. They've also put some of them separately. The data is just all over the board. So as much as there is some information in the initial unemployment claims, it's gotten very muddled itself because each individual state and territory like Puerto Rico, Washington, D.C., Virgin Islands, they all have to report it individually and have their own individual systems and are classifying things differently. So I do think that is a problem. That said, what was notable in the unemployment claims, which ended June 27th, was the pullback that we had already seen by consumers that occurred in the second and third weeks of June, already resulted in a surge in layoffs in states like California, Arizona, Tennessee, and Florida. And those were some of the states with the highest new unemployment claims. So even though the data is muddled, it does get to this sort of high frequency data we're seeing where economic activity pulled back again at the end of June. And as we go into July, we're going to face a real uphill battle on keeping the expansion going at a pace that we need to recover all the jobs lost.
Diane, let me pick up on that point. You've talked about sort of the rollback we've seen in the timeline for the reopening of the economy. We heard McDonald's today come out and say they're not going to do indoor dining for several more weeks. Apple's now closing some stores. It seems like we've gotten this trickle of news over the last several weeks. How should we be looking at that in terms of the impact to the labor market? Is it a pause in the recovery, or are we actually going back to where we were maybe a month ago or 2 months ago?
That's a great question. One of the things that's most disturbing in today's employment report was actually, even though temporary workers were called back, they also could be laid off again. They're the most vulnerable for this sort of rebound layoffs as states struggle to reopen, and just confirms just even if they aren't forced to shut down, it's just a lack of clientele. Fear is its own factor here in terms of keeping people away from stores and public places. So that's important. But what's also really important is permanent layoffs, and the permanent unemployment rate has actually been going up more rapidly, even as we got rid of some of these workers who returned to work. So we're not seeing the kind of ramp up in, we're calling some workers back, but there's not any new job creation. And to look at this number and say, hey, record month of job creation, not really. This was just a record month of callbacks of jobs we just lost. And I think that's important because at the same time that's occurring, we're seeing more permanent layoffs start to accumulate. And that's what we worry about as we get into the summer months, because if you can't get some of these temporary workers back, transitory or temporary layoffs back, you're going to have those add to the permanent layoffs and become much more permanent and less transient. And so this is something along with the state and local governments. State and local governments have shed 1.5 million jobs since the start of this crisis, and we're now entering the new fiscal year on July 1st. That's going to be compounding the bloodletting at the state and local level. That's more than double the job gains that we got in recovering from the crisis, and takes us back to 2001, mid-2001, the recession of 2001 levels for state and local government employment, which, when you think of 1 in 8 people are employed in state and local governments in this country, that's something to really watch.
Hey, Diane, Rick Newman here. So most of this churn in the job market, layoffs, and then some callbacks has been in the sectors we know about that have been hit directly by COVID-19, retail, hospitality, travel, and so on. Are you seeing an increase in job losses or any changes in other sectors not directly affected by COVID? And I'm trying to just get a sense of, is the collateral damage from this recession expanding more broadly?
Yeah, that's a great question. And one of the things we are seeing, and there's been some research on this as well, is that we're much more susceptible to wage cuts during this particular crisis than we've been nominal wage cuts than we've been in other crises. Many firms, in order to preserve cash flow, ask their workers to take a cut in wages, hoping to preserve cash to get to the other side and then, ramp up again. What we worry about is how lingering those will be. And when we're seeing these, permanent job losses, the unemployment rate for permanent job losses going up rapidly, even as the overall unemployment rate is coming down, you start to worry about the spread and collateral damage into, people who can work from home, but now the demand for their work is starting to shrink a bit. So they don't have as much they can do at home, even though they can work safely from home. Those are real issues that we're struggling with in terms of thinking about what the outlook for employment is over the summer and as we get into the fall months, because many of these industries, you think of real estate, in particular, commercial real estate, that's a sector that's been hit hard by the crisis, but will have lingering effects and has a lot of small businesses that are ancillary to it that could be very much affected in the service sector because people don't pay their rents.
All right, Diane Swonk, Chief Economist at Grant Thornton. Thanks so much for taking the time to join us on the show. Great to have you. Have a great July 4th weekend.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.